Hello friends, today I am going to discuss one project like how to analyze FTSE stock price. So I hope previous video we have discussed so many projects like mathematical projects and matplotlib, how to apply the matplotlib. There are number of linear algebra project. So today just FTSE is a listed in a London stock exchange. So how to download it FTSE data. So let's see, first I am going to exclamations pip install y finance Yahoo Finance. So I am installed because I am working as a Google Colab platform. So I think everybody is aware with my platform. And now I am going to the import pandas as a PD, import numpy as a np, import y finance as a yf. There are three most important library we need to import it. Now I have done like a df will equal to yf, just I have done here download. This is the samples I have gotten from Yahoo Finance. So FTSE need to the put here this symbol. Start from, I have taken the data from 1985 and it is end like 18/12/2022. Progress false. So done, and it has been imported. After that I want to see the what type of data is look like. So I need to see here the 9 rows. So 1 2 3 4 5 6 7 8 9. So we, if you need to the more than 9 rows, 20 rows, you need to put here 20. So we can easily see there are the number of the rows and how many columns has in this data. So look here, open price, high price, low price, close price, adjacent close price and volumes. So now we can see here. After that I am going to the import because we are plot, we want to visualize this price. So import matplotlib.pyplot as a plt. Matplotlib is also the another library to use like a visualizations. So df and closing price. So let's see, just we have seen here the close is a one of the columns, and so I am going to the plot like a closing, and this is a figure size. If you want to the increase this figure size, your plot size will be increases. Another data frame, if you want to like start from the volumes, so we can also see here the volume. Now I want to the plot both of them together like a closing and volume. Dot plot subplot will equal to true and a style like a blue. If you want to write here red, you can write there red, green, G, and figure size it has been given. So we can easily see the volumes and price together. Now the next step, we are going to the describe this data. So let's see, the describe means there are some statistics like a count. So we have taken 9,590 rows and we have gotten the mean from the opening price. This is the high price, this is the low price, and this is a closing price, adjacent close price, and volume. And a standard deviations we have taken like 1874. Look here. So minimum value 25 percentile, 50 percentile like a median, 75 percentile like a quartile, Q3. Maximum is has been given, look like this, 7877. So I hope is it clear. Now I want to get here what is the simple return of this stock price. So let's do the simple return, DF as a variable, and closing, because the simple return we need to the difference between the 2 days price and divide by the previous day, and it will multiply with the 100. So I have written this way. Similarly the log return, so we can write the log of the previous day, and so look here, log of the present day divided by the previous day, and we can go here. Similarly the DF, the log return, we have already plotted, and we can see here my log return, it is a better forecast the previous way. So similarly these are the numbers, we can see the log returns like 16, 12, we have gotten the only approx minus 1%. Similarly we can go the less than the 1% and other these things have been given. So most of the time you will see that we have gotten the negative returns. So I think it is easy to understand this market. So what should I do? Let's see, now I want to compare this FTSE price and VIX volatility index. So we want to compare like this. So I have imported some additional library like a Seaborn as a SNS and SCIPy.stats as SCS, import stats models dot API as SM, import stat models dot TSA dot API as SMT. So let's see the DF dot YF dot downloaded and FTAC and VIX. Now we start 1985. So just we have already discussed, so I don't need to discuss more. Similarly I have taken the adjacent closing price, and now the DF dot columns, so DF dot columns dot drop level like a 0. So we need to the only one column, so let's see, just I have taken like a drop levels, putting here the drop level functions. So DF will equal to DF, rename like FTSE, rename like the FTSE small, and VIX also like a small VIX. Now we want to see your data like FTSE has been given and VIX has been given. It takes automatically if you don't write any whole numbers, so you can see the automatically it will see like a 5 rows. Now I want to get here the log return and volatility return. So we have gotten both of them like a log return and volatility. So DF drop on how any like a axis 0 and inflation like a 2. I want to show the correlations, so let's see the DF dot, always we get the correlations between with the two data. So we have already the two data, one is the VIX data, another is the FTSE data. So let's try coefficient, correlations coefficient. So DF dot log return correlations. So we are going to get the coefficient correlations with the log return. Like, so volatility has been given, AX will equal to SNS. We have already imported C1, so it represent SNS dot reg regressions plot. X we are taking a log return and y we have taken like a volatility return. So data we have taken df, and this is the color you can take. So as a set like a title FTAC was VIX, and we want to also write here the some returns value. So y level like a VIX log return and x level like a FTSE log return. So let's see here the negative regressions lines, like it is coming from, because this is the VIX log return and this is the FTSE log return. So if you compare, the VIX is going downward with respect to the FTSE. Okay. Now see here just R range NP line space and minimum the df dot log underscore return and the maximum df dot log return. So number we have taken the 1000 and df dot log return like a mean we want to get here standard deviations. So now after that PDF, so SCS normal distributions PDF and R range LOC mu just mean and scale sigma. So sigma like a standard deviations return, and we want to the plot together. So AX will look at PLT subplots, and because first row and these it contains a 2 columns. So let's see the 2 columns here, and peak sizes has been given. SNS dot distributions plot here df dot log return and KDT false normal historical distributions like a true, and AX will equal to 0, and AX set these titles. So this one is the distributions of FTSE return and font size 16, X0 plot R range normal probability distribution functions like, and another label is the here the mu 2f sigma 4f. Legend upper left, look here, legend has been given, and now we need to the QQ plot. So I have plotted both normal distributions and QQ plot. So this is the theoretical quantiles, and it look like very good. So low we can say the first standard deviations minus 5% and plus 5% and minus 10% and 10%. Similarly the Q2 quartile. So let's see the log return tails, just we have already discussed, and log return plot we can also do. Now we are taking just n as it lags 50 and significant level like a 5%. So ACF auto correlation functions and SMT we have already imported library as a graph plot ACF DF plot log return log lag here. So lag n lags and alpha will equal to significance underscore level. So we can see that is it good and not good, look like a significance level. Now the import the matplotlib.py plot as a PLT and fix size like a AX PLT subplots and 2 rows and 1 column fixed size. So let's see the 2 rows we have already created, and alpha means significance underscore level, AX will equal to AX and 0, AX0 dot set the title auto correlations plots, and Y level like a square returns, SMT graphics dot plot underscore SCF NP dot ABS df log return, and lags will equal to n underscore lags. So alpha will equal to significance underscore level, and ax1, and set the absolute return x level lags. So I hope you can see and understand this data. So is it good and not good? So next, the df moving standard deviation like a 250 days. We are getting the log return rolling a window to 52 standard deviations, and df moving standard deviations like a 21 days, this way. And now we are going to the plot here, subplots. There are 3 rows, 1 columns fixed size, and df plot like a x0, and title I have given. You can write your title, and I think it will be the better to understand. So let's see, this is a way we can plot these things. So I hope this will be clear to understand how to analyze, and we can easily understand is it moving upward and downward. So look here in this data, moving average 21 days is a crossing, it's going at high volatile market, and now it is below the 250 days, it is going down. So this is a way we can understand price fluctuations in the stock market. So I hope it will be helpful for everyone, and thank you for today.